Hello guys, welcome back to another exciting video and welcome back to RALLYTOP Investing. Now in today's video, we want to resume our weekly forex analysis. I'm sorry that we have not been doing that for quite a while now. The simple reason is that I've been pretty much busy, but I can assure you that from today, all right, we will be having more of our weekly forex analysis, and it's going to be titled "Let's Make Money Together." Okay, that's going to be the title, and in due course we shall be allowing for people to join our live webinar when we are doing our weekly market analysis. So please get yourself prepared for that if you're interested. Now in today's Let's Make Money Together, we are going to look at two currency pairs or instruments, if you like. Now we are going to look at GBPUSD and then gold. Okay, now first of all, let's look at the daily time frame of GBPUSD. The first thing you need to do when you get to your chart is to mark out the structures of the market. As I'm talking about your swing highs and your swing lows. And in this case, we want to mark out the most recent swing points in the market so that we can understand what we're doing. Now take a look at this high, all right? If you have been following us, you will be able to understand why this high, all right, is a valid high. The reason why that high is a valid high is so simple. It is because price has to take out inducement for a high or low to be confirmed as a valid high or low, all right? And as you can see, inducement had been taken out there. This is our inducement, and price has taken it out, confirming this high as a valid high. Okay, now our low cannot be confirmed just yet until it takes out this very major structure high here. Remember, this is a major structure high, and price has to take it out with a candle closure to confirm this low as a valid higher low. All right, and as you can see, price took it out, all right, with candle closure, even though it took it out initially with a candle wick, but it eventually confirmed it by closing above it, all right, making this a valid break of structure. So this is our break of structure here, and therefore with that break of structure, this low is confirmed as our valid low. Okay, so I want you to understand that that is our valid low in the market. And then price printed this high. Is this a valid high? No. For this high to be known as a valid high or to be confirmed as a valid high, it has to take out inducement. And where is your inducement? Well, your inducement is here. This is where your inducement is supposed to be for this high to be confirmed as a valid high. But as you can see, it didn't take out that inducement before price created another structure. All right. And when it printed that structure, where is your inducement to confirm this high as a valid high? Well, our inducement will be transferred from here, all right, to this point for this high to be confirmed as a valid high. And therefore, because price now has taken out that inducement, okay, price has taken out that inducement, and therefore our high is confirmed as a valid high. Okay, but remember, so this is your inducement in the market. But remember that this is your major structure low before this major structure high. All right, so you need to understand that this is your range from this major structure low to this major structure high. And then price came down to take out this inducement. As you can see, it took it out. All right, after taking out that inducement, you can sell, you can buy the market because the structure is bullish. As you can see, we are bullish. All right, so after taking out your inducement, you do not want to trade before inducement is taken. You want to trade when inducement is taken out. Now inducement has been taken out, so where is the possible OB, that you can capitalize on to take trades from? Now remember, your after your inducement, you have your decisional OB, and after that decisional OB, you now have your extreme OB. All right, now as you can see, where is your decisional OB here? Well, if you say this is your OB, remember, this one has already been mitigated, okay? And therefore, this is the next one. Take a look at this. This is the next one. Is this one mitigated? Let's see. This is your OB in the market. And as you can see, that OB was not mitigated, all right? But it eventually, let's see whether it eventually was mitigated. It was not mitigated, but price came to it. Oh, sorry, guys. I'm sorry about that. Okay, so price eventually came to it. Price eventually came to it and gave a momentary reaction to the upside, all right? On your lower time frame, you could have taken advantage of this movement here, all right, of this reaction here to make either you would have made some profit or you would be on break even, all right? But price tapped on it and reacted. Remember, this is the daily time frame. This small movement that you're seeing here is a big movement if you get to your lower time frame like the 1H, all right? So, and after that, after price reacted off of that point of interest. Now, remember, this point of interest is your demand zone, all right? That's your demand zone, and so therefore, so that's your demand zone. Price reacted off of that demand zone and went up a little, but failed, all right? When it failed, now, where is your extreme OB here? Your extreme OB is this one here, guys. This is your extreme. Now, this is, where is your extreme OB? Everything is mitigated here. Everything is mitigated here, okay? So, price reacted and came down. And remember, this is your last significant higher low before your higher high, okay? And if price breaks and closes below it, that becomes your chalk. And as you can see, that happened here. And therefore, this becomes your change of character in the market, all right? So as you can see on the daily time frame, we are now bearish. Price, the market has changed from this bullish structure to bearish structure because it took out this major structure low here before this high. It took it out and closed below it. So we are now bearish. So we want to look for opportunity to go short in this market right now, all right? And as you can see, where can we capitalize on to take advantage of what is going on in the market? Well, for your low to be confirmed as a valid low, it has to take out inducement. All right, I told you this before. So where is your inducement here to confirm this low? Well, your inducement is this point to confirm your low. All right, and as you can see, that inducement has been taken out. So confirming this low as a valid low. So we can actually say this is our valid low in the market. Okay, so that's our low in the market because price has taken out inducement. All right, now when it took out inducement, what happened? Well, take a look at what happened. When it took out that inducement, look at what happened here. It reacted off of this fair value gap. All right, take a look at this fair value gap here. So it reacted off of this fair value gap. Let's see. As you can see, it reacted off of that fair value gap. I want you to understand that very, very well. So it reacted off of that very fair value gap. If you go to your lower time frame, like the 1H, you could have taken advantage of this reaction here, all right, to take trade lower. Now, remember, we are bearish because price has taken out this major structure low here. So we are bearish. And when price tapped on this fair value gap, you could have gone down to your lower time frame to take advantage. But beside this fair value gap, where is your actual decisional OB? Apart from the fair value gap, take a look at this, guys. Take a look. This would have been your decisional OB. All right, apart from that fair value gap. So a price, because we are bearish, okay, until price breaks this low, we are still looking for price to go back up to tap on this your decisional OB and perhaps react off of it, all right? But we do not know what price will do, whether it's coming down to take out this very structure low here. If it comes down to take out this very structure low, then we'll begin to look for the proper structure in the market to go short, all right? So, but for now, as far as we are concerned, this is your high. I want you to understand on the daily time frame, this is your high and this is your low. So you still have the whole of this place, all right, as a trading field for price to go back to, all right, and react off of before coming down, all right. But essentially, remember, we are bearish now because price has taken out this major structure low here. So we are bearish, all right. So price can go up. Let me show that to you. Price is free to move up to this point, okay? Price can move up to this point, all right, before coming down. Why? Because we are bearish. I want you to understand that we are bearish. So price can do that before coming down. And then we want to look for possible scenarios here. After this, your decisional OB. Now, where is the next OB? Your next OB is your extreme OB. And that your extreme OB will be here. Take a look at it. This will be your extreme OB, all right? Why is that your extreme OB? Because it took out the previous candle's high, okay? So if price comes to this OB and reacts there, that will be a better place for us to take the trade, all right? Now, but if price comes down to take out this low, well, we need to wait for a new structure to be created. Otherwise, if price moves back up from here, okay, the first OB, we would like to look at the reaction of the market is here, which is your decisional OB. And after that, is this your extreme OB? I hope you understand what we're trying to say here, all right? This is very simple, something for you to understand. It's very simple for you to understand. So that's what we are expecting on the daily time frame. But essentially, we are bearish on the daily time frame. And now we want to check at the 1 hour. We want to check on the 1 hour to see what actually 1 hour is holding for us. All right. Now we have established on the daily time frame that we are bearish. Okay. And we have marked out some points of interest that we'll be looking to take advantage of. Now take a look at this. All right. Price has reacted off of this our fair value gap, the daily fair value gap here. You remember that? That's the daily fair value gap. And then price came back down. All right. Now price is here now. Remember, we are still bearish on the daily time frame, and therefore you want to see how you can capitalize on it. But we cannot be waiting for a bearish structure only. You need to think on both sides of probability. All right. Now, as you can see, for this price now, price has printed a low here. Okay. Now, when it printed this low, remember, here is your structure here. Here is for this low to be confirmed as a valid low. Price has to come back up to take out this structure here, which is your inducement. So we are waiting for that inducement to be taken. Inducement has to be taken for you to take before you take any decision in the market. And after the inducement has been taken, where is your OB on the 1H that you can capitalize on? All right. Now, if this fair value gap holds price, all right, if it holds price, now this is what we'll be expecting on the 1H. We will expect where after this inducement, where is your 1H point of interest that you can look to take this trade from? Now, the first one is here. Let me show you that first one, which will be your decisional OB. All right. Where is the first one? The first OB would be here. Let's see. It took out inducement. All right. And everything is mitigated here. This one is mitigated. Now the next one is here. This is where you can capitalize on, all right, to take your trade from. Now that is your decisional OB. On the 1H, you can go down your 5 minutes time frame and refine this OB because it's too large. All right. Why do I mark this OB? I mark this OB, I think, because there is a imbalance. I think there is a slight imbalance here. This candle did not touch this one. All right. So there is a slight imbalance, a minor imbalance there. It does not matter how small the imbalance is. An imbalance is an imbalance, or a fair value gap is a fair value gap. All right. So that is your POI that you want to look for. Now, the next one, your extreme, is this one here, guys. Your extreme point of interest is this one here. This one is your extreme. All right. So if price comes into that, all right, I think there is a little gap there. There's a tiny gap there. All right. There's a tiny gap there. So price can come to this OB. I don't think this OB is it mitigated? Let me see. We need to find out whether it is mitigated. Let's see. The low of this candle is 1.23151, and the high of this candle is what? 1.23147. So there is a little imbalance there. There is a fair value gap there. All right. So these are the 2 points of interest that we are looking at on the 1 hour time frame to take advantage of. So if price takes out this inducement and taps on this first point of interest, which is your decisional OB, you can go down the 5 minutes, all right, to wait for confirmation entry. Okay. And if it fails here, well, you can wait for this OB here. But if the 2 OB fails, that means that price will be going higher to tap on your daily time frame decisional OB here before the extreme OB. I hope you understand what we're trying to say. Now, that is the picture of GBPUSD on both the daily time frame and the 1 hour time frame. Okay, so now we want to go to the to gold and see what gold is holding for us. Okay, so now let's get to gold and see what is holding for us. Now we want to go to the daily time frame first of all, so that we can know what the daily time frame is doing for us. Okay, so this is your daily time frame of gold. Now let's mark out the structures here first of all and see what is happening here. Okay, as you can see, gold is pretty much bearish. I mean bullish. It's pretty much bullish. And let's mark out some structure points here. Let's mark out some swing highs, the most recent swing highs and swing lows in the market. Now, as you can see, this is a high. Now, for this high to be confirmed as a valid high, it has to first of all take out inducement in the market. And as you can see, our inducement is here, and the price has taken out that inducement. Okay, this is our inducement in the market. So price has taken out that inducement, confirming that high as a valid high. All right, and now where is our low? Well, our low, our higher low cannot be confirmed just yet until it takes out a major structure, this major structure high here. All right, when it takes out this major structure high with a candle closure, then that will become our we can now determine this low as a valid low. All right, and as you can see, price took it out with a candle body closure. All right, and that becomes our break of structure in the market. Now, after that break of structure, this low is confirmed as a valid low. So we can actually say this is our higher low in the market. All right, so that's our higher low in the market. And if price comes back down to take out this low, that means that we'll have what is known as change of character. I hope you understand that very well. Now, let's continue. After price, sorry guys. Now, after price took out this major structure high here, all right, it created this high. Is this a valid high? No. For this high to be valid, it needs something, and that will be inducement. Like, remember, I told you without inducement, you cannot trade, all right, the market. So that becomes your inducement in the market, all right? Now, but as you can see, it didn't take out that inducement, and before you know it, it created another high. For this high to be confirmed as a valid high, it has to take out this very inducement, all right? Our inducement can be transferred to this point, all right? And we are waiting for price to come and take it out, okay? And as you can see, price did not come to take out that inducement, and it created another structure in the market. And for this structure to be valid, it has to take out inducement. And where is our inducement in the market? Well, our inducement is here. Our inducement can be transferred to this point, okay? And as you can see here, inducement was taken out, all right? Inducement was taken out, creating this low as a valid low, all right? So we can now say that this is our next low in the market. It's our next low in the market. Now, before this high, all right? This is our next low before this high. And for this high to be confirmed as a valid high, it has to take out inducement. And where is your inducement here, guys? It has to take out inducement. Your inducement is this one. Let me show you where your inducement is here. Now, this becomes your inducement in the market. Okay, this becomes your inducement in the market. So that's your inducement in the market, all right? That's your inducement. So we can donate it by saying that's your inducement has been taken out in the market there, all right? So confirming this high as a valid high. So this is our high now in the market. That's our daily high, okay? But remember, now, as price has taken out that inducement, this was our previous major structure low before this major structure high. All right. Now, as you can see, there is no inducement here other than here. So price has taken out this major structure high. This serves as your inducement. All right. This serves as your inducement. So your major structure lower high, higher low before this higher high is no more here. All right. I want you to understand that very well. It's no more here. Okay. It is simply inducement. This is your inducement in the market. So your major structure higher low before this higher high is still this one here. Okay? I want you to understand that. It's still this one here. So when price takes out this one, when it takes it out, it becomes a change of character in the market. So we are expecting price to come and take it out. Okay, we are expecting price to come and take it out before we know there is a change of character in the market. But as it is now, as you can see, price did not come to take it out. Now, all right, after this inducement, remember, after inducement is your decisional OB. So after this inducement, where is your OB in the market? Okay, where is your OB? Well, after the inducement, everything is mitigated here. Let's see. Everything is mitigated. So this can become your decisional OB in the market. If price reacts, remember we are still bullish. This can be your decisional OB in the market. All right. If price reacts to this point, we can take advantage of it. And as you can see, price came and reacted and went up. Remember, this is daily time frame. This small reaction, this thing that you see as a small reaction, is a large move. You're all right on the lower time frame. So you could have taken advantage of this reaction on this decisional OB on the daily time frame to take advantage of it and make huge profit on your lower time frame. All right, like the 1H or even the 5M. All right, and then after that, what happened again after this decisional OB? Now, as you can see, the decisional OB failed to go and take out this previous high. It failed. Before you know it, it took it out. All right, when it took it out, all right. Now, this is our low. Why is this our low? It took it out because this is our low. Now, why is that our low? It is because price has taken out this inducement here. I mean, this inducement, of course. It has taken out this inducement here. All right? So, inducement was grabbed there. I want you to understand. Inducement was taken there. After that inducement, price reacted and then came down. All right? So, you could have taken advantage when price took out this. Let me show that to you. Well, for those on our VIP community, they will understand. So when price took out this structure high, all right, when it took it out, you could have taken advantage of this OB here. This is a very strong OB, guys. This is a strong OB that you could have taken advantage of. All right, go to your lower time frame, then you would have gotten a trade from here. And as you can see, price reacted off of it and dropped. Where did it drop to? Well, it dropped to your OB here. Where is the OB? Your extreme OB is here. Okay, remember, when price takes out this low, it becomes a change of character. But for now, since it didn't take it out, this is your extreme OB, guys. All right, this is your extreme OB. Why is that your extreme OB? Because it has an imbalance there. And remember, okay, remember that it took out this previous candle low. All right, now it swept liquidity there and there is an imbalance. Okay, now that is your extreme OB, and as you can see, price reacted off of that extreme OB and start going up. That's on the daily time frame. Now, but let's look on the what do you call it, on the 1H time frame. Remember, on the daily time frame, we are pretty much bullish. We are pretty much bullish. And therefore, if we drop down to the 1H, let's see what the 1H holds for us. Let's see what the 1H holds for us, because this is crucial. Now, price has tapped into our extreme point of interest here. All right, let's see. Now, this is the first time price tapped into our extreme point of interest. All right. Now, for you to have your change of character here, you need to have, this is where you're supposed to have your change of character. All right. Concerning this first drop into this point of interest, this is where you should have had your change of character. But as you can see, there was nothing there. All right. Price didn't react off. It didn't get to that point. Okay, and before you know it, price printed a new low here. And for this low to be for this low, all right, where is your change of character here? Now, our change of character can be transferred from this point. All right, this is your new low now. All right, where is your change of character? Well, your real change of character would be this one here. Okay, that's your change of character. But as you can see, it didn't really come up to take out that change of character to confirm that price is ready to go bullish. All right, but rather it printed another low here. And where is the change of character here to confirm that price is ready to go bullish by taking out the change of character? Now take a look. This is the change of character here. All right, and as you can see, it took it out. All right, once it took it out, take a look at what happened here. Now price took out this previous low, okay, with a wick. And therefore, when it took out this chalk here, what you need is, you don't need to wait for any inducement. You need to just wait for direct entry, all right, on your chalk. I hope you understand that. But as you can see, price didn't come back there. Price started going higher, all right? Price started going higher, printed this high, but the high is not valid because it didn't take out any inducement. And before you know it, it printed this high. This high, for this high to be confirmed as a valid high, it has to take out inducement. And as you can see, your inducement is somewhere here. All right, for that high to be confirmed as a valid high. And as you can see, it didn't take it out before creating another structure in the market. And for this structure, all right, to be confirmed, inducement has to be taken out. Inducement has to be taken out. And where is that inducement? This is where your inducement is supposed to be, all right, for this high to be confirmed as a valid high. But as you can see, it didn't come down to take it out at all, all right? And before you know it, price created another structure high. Now, your structure high here cannot be confirmed until inducement has been taken. This inducement must be taken out, all right? And as you can see, it didn't take it out and it created a new structure, all right? But eventually, all right, this high took out inducement. And where is the inducement here? This is the inducement it took out. This inducement was taken out. Oh no, this one was taken out. All right, so that's your inducement in the market. And as you can see, it took it out, confirming that high as a valid high. This one, let me show you the high. This high is confirmed as a valid high, okay, because it took out inducement, all right? And after taking out that inducement, okay, so where is our low? Our low cannot be confirmed just yet until it takes out this major structure high here. If it doesn't take out this major structure high, our low cannot be confirmed, all right? And as you can see, price took it out. It took it out with a candle closure, all right, confirming this low as a valid low. So this becomes your break of structure in the market. I hope you are following what we're doing. That becomes your break of structure in the market. So where is your low now? Well, your higher low is here. That's your higher low is there, all right? And after that low, what happened? Sorry guys. So after that low, this is where we are now in the market. Now, what do we want to see here? On the 1H time frame, as price opens, we want to see inducement being taken out. And where is the inducement here? Check for the inducement here. Where is it? Well, as you can see, there is no inducement. Is there any inducement there? I cannot find any inducement. Well, this is a small inducement. This is a minor inducement here. This becomes your minor inducement. Where is it? Where is that inducement? This becomes your minor inducement. So this is your minor inducement. So if price takes it out, all right, and wicks below this inducement and gives us any confirmation to go long, then we'll be more than happy to go long from here. Otherwise, this will be your major inducement here. So this major structural low here will turn to your inducement, and therefore we'll be waiting, all right, to take entry either from this OB here or from any extreme OB. But I think this OB will be the proper one to take entry from. Okay, so I want us to understand that one very well, but our eye should be on this inducement here, this minor inducement here. But if price creates a new structure, then our inducement will be moved from here to that new structural point. All right, I hope you understand what we're trying to say. So far, that is where we will draw the curtain on this week's weekly forex analysis. Okay, by next week we hope that we'll look at more pairs or more instruments than we have done today. And if you are new to our channel, please don't forget to subscribe and hit the notification bell so that anytime we publish a new video, you'll be alerted about it. And please, we want to appeal to you to give us your like. It's just completely free. All you need to do is to just hit the like button. Just give us your like so that more people can see this weekly forex analysis and also make money alongside with us. Okay, and if you are not yet to join our Telegram channel, please endeavor to do that. I'm going to also leave the link in the description. And if you want us, if you want to learn about how to take your trades effectively like a pro, then you can join our VIP community. I will also leave the link in the description below. All right, guys, I see you in our next weekly forex analysis. Have a wonderful day.